Hello, everyone, and happy Friday. It's that time of the week. It's time for the Security Token Show. You know, I'm your host, Herwig, or you can call me Happy if that's easier. And you know I'm happy about tokenizing. Man, what another great week for the space, tokenizing real-world assets. We've got all the news and a great interview with Yuval Rooz, the CEO of Digital Asset. So why don't we just jump right into that one?
Good afternoon, everyone here on the Security Token Show. We have a new interview today with Yuval from Digital Asset and Canton Network. Yuval, how are you today?
I'm good, Jason. How are you?
Doing well. Thanks for coming on. So for some background, everyone listening in, we noticed that Etherealize had launched, their platform here and what they're building. And we also saw an X post response from Yuval there. So that's kind of how we got in touch here. And before we get into the X response, for context here, Etherealize is essentially building, content and products on Ethereum for institutions. That's their goal. Yuval, I'd love to get your thoughts on Etherealize to kind of kick it off here.
Yeah. So first of all, I mean, kudos to Vivek for being focused, and you look at his background, and clearly the person understands capital markets and understand kind of like what are the driving forces behind what Wall Street does, and that's a good thing. I always say that I think that having different views in this ecosystem of people that are coming kind of like with no context to what is Wall Street, what is capital markets, and kind of having this vision, we can do it better without even being in it is a good thing. But then having some of the contrast of people that came from the industry and also understand some of the inefficiencies, why they have been created, why they are there. Sometimes there's good reasons for them is good, because by doing that, you really do get this diversity of opinions, and you do create better products over time. So first of all, I'm just very happy that he's doing it, and it's good to see kind of like the energy behind it. I think that from the day we created Digital Asset and started building Canton, what Vivek is talking about was kind of like our one singular motion and vision, is that at the end of the day, Bitcoin is a very unique asset class, right? It doesn't have an issuer. It's not trying to be anything other than a censorship-resistant, store of value. And, there might be a few of them, a handful, but at the end of the day, most of the assets in the world are going to be RWAs. And so for us, it was always the vision of how do you bring, 300 trillion plus worth of assets on chain. That was always. So, I'm very aligned with what Vivek is trying to do. I guess maybe our approaches are going to be slightly different, but I'm, very supportive of what he's doing.
Appreciate that. And it makes sense, right? Financial institutions do have a certain set of requirements of, if we're going to do this is kind of what we need in place to be able to put some, higher risk essentially, on chain here. Just given the momentum or how much they move around, right, and have control over. There was something that I want to dive into, through your X response on to Etherealize's Vivek, specifically his interview with Unchained, Laura in there, which was the on zero knowledge proofs specifically and on-chain privacy. I'm curious to dive a little bit deeper. I think there was something that you said that resonated with me, which is as Wall Street moves on-chain, let's remember the goal isn't just speed or privacy, it's trust. Can you expand a little bit more about this and what the difference you see fundamentally between zero knowledge proofs and what Canton is building here?
Sure. So first of all, let me explain. I mean, if you subscribe to my assessment that most assets on chain are going to be RWAs, it's again very different than Bitcoin. Bitcoin does not have an issuer. You don't need to trust. You don't have counterparty risk. The code of Bitcoin is really what you trust. It doesn't run by anyone, right? It's decentralized, and you don't have a lot of the issues that you have in the real world, where at the end of the day, you do have different types of risks that are, factored as part of the issuer. So if you're a stablecoin provider, how do you manage the cash that has been deposited? Do you actually spread it, carefully across different custodians? Do you actually invest in the instruments that you're saying? If you have private credit, you have credit risk. Like, all of these assets have different types of risks. And at the end of the day, really what we're doing by putting them on blockchain is we are reducing a lot of the friction that currently exists in the financial system. That being said, we're not getting rid of, the trust that is needed through some of the people that are bringing these assets to life, right? And there are different mechanisms of how to reduce these risks, but it doesn't go to zero. And that's why my point is there's always need to have some kind of trust when you think about RWAs. That's just one anecdotal statement. I think when you start thinking about all kinds of use cases, this idea of privacy is going to be, in my opinion, really like a must-have when you start thinking about institutional grade, right? Like, even today, we're seeing crypto players that are saying, we don't like whale watchers, kind of displaying to the world what we're doing, and then people front run us. We talked to a company that does cross-border payments, and they're using stable coins, and the FX traders front run them because they see massive movements of FX moving on chain. So this idea of privacy, to me, first of all, is to some extent a human right. Like, being able to have privacy is extremely important. And then, just practically speaking, I think large scale institutions, which we all want as an industry to come on chain, just must have this privacy. I mean, think about a publicly traded company. Like, they don't want, that like once a quarter they have earnings and they disclose everything to the world. They don't want all of their activity to be kind of like for everyone to see in real time. So privacy, I think, and I think Vivek also on the podcast have agreed, is going to be a must-have to solve to bring these assets on chain. Which leads us to kind of your question about zero knowledge. I think that when we started building our layer one called Canton, privacy was kind of like an anchor tenant. So we said we will not launch this layer one until we figured out how we can solve for privacy. It was just like kind of like a design requirement. I think that when you think about, public permissionless chains that have been in existence for a while, Ethereum being one of them, that was not a design requirement. Privacy was not a core tenant. And that's why you have, companies like Elliptic, TRM, Chainalysis that actually can do a lot of tracking of what's happening on chain in real time. And therefore, I think that there's a lot of excitement about zero knowledge today, because the hopes is that you can come to systems that haven't been designed with privacy as a first principle, and now kind of put something on top of it and kind of fix the issue as an afterthought. And this is where we have a very strong disagreement. And I'm happy to kind of go deep into kind of why we think that about zero knowledge, but just to put it out there, one of my co-founders has been kind of deep. He was in the Technion in Israel, in the team that have researched zero knowledge. He was one of the guys who wrote libsnarks, which is a C++ library that is highly used. So we have a lot of appreciation and admiration for that technology. When you talk about scaling, we believe that it's a really good technology to use for scaling, where you could package a lot of transaction and kind of speed up the process. But we think that when it comes to financial services, not only that it's not a suitable technology in many cases, I would say it's actually a very risky technology in many use cases.
So I do want to go in deeper into that, just that right there. Why is it risky, and
Sure.
and what's the difference, right? Because I think there's a portion where it's like, okay, is it native to the blockchain, or is it a layer on top of it? And which, please dive deeper into the riskiness that you're referring to there.
Sure. So Listen, and I'm sure I'm going to have a bunch of ZK experts grill me after this podcast. But the way I think about ZK is it gives you the ability to say, I, as a consumer, am only interested in the output. I really want to know that the output is valid, and an algorithm inside the box, and the algorithms puts, and I, as the consumer, don't really need to know what are the inputs. So I'll give a very kind of rudimentary example, which I think is a good use case. Is, you go to a bar, you give your ID. Really, the bartender doesn't need to know what is your date of birth, what is your address, all of the information that is on your ID. They just need to know that you're over 21. So imagine something can scan your date of birth, and then there's an algorithm, a very simple one, that just says, are you over 21 or not? And if you are, it gives the bartender, thumbs up, drink up, have fun.
Yeah,
right?
Essentially a true or false return, essentially.
Correct. And it's a great, right? Like, I've just protected some of my personal information in order to achieve an outcome that I wanted, which is to, drink some tequila. And as we all know, and this industry started with code is law, and then we had the DAO hack, and suddenly code is not so much law. And we had all kinds of other examples where code clearly has mistakes, and it's inevitable that we're going to have mistakes. So let's imagine what happens if it didn't get your address correctly, your birth date, and now suddenly it says you're over 21, but you're actually really 18. So that's a bad outcome. You're going to be allowed to drink tequila when you're 18 in the US, which is not allowed. But is the world going to melt down and the financial system will crash as a result of that? Probably not. Now, let's imagine another example of a zero-knowledge algorithm that is now used to deposit collateral. And you don't want to see who's depositing the collateral. You just want to know that the collateral is there. And we'll call that box, zero-knowledge box, we'll call it Sam Bankman-Fried. And every time you give Sam Bankman-Fried collateral, Sam Bankman-Fried says, yes, the collateral is here. It's all good. It's fine. And now imagine suddenly there's a market event, and now suddenly you really need to use that collateral, but you find out that there was a bug. And actually you could have minted collateral out of thin air, and the box would still say, yeah, the collateral is there. That would be a very bad outcome, as we've seen in reality when someone says to you the collateral is there, and it actually isn't there. And I think that that's really the risk. There are certain mechanics in capital markets where just relying on a black box telling you everything is good inside could have really bad consequences. And this is not just a theoretical issue. Zcash actually had exactly that issue. You could have actually minted coins out of thin air. There was a bug in the code, but because it's zero knowledge, the chain said everything is okay. Nothing wrong here, nothing to look at. And I think that that's kind of the problem, is that when that gets discovered, how do you actually know, did someone exploit that bug until that point? So in financial services, and this goes back to kind of my point, Jason, about trust, there are certain points where to us, privacy is not anonymity. It's not a black box where if you, Jason, are a clearinghouse or you are doing a lending protocol and you need to know that the collateral is there because your financial models and all of your lending models depend on that.
Right.
You need to know that it's there. You can't just rely on a black box to tell you it's there. So to us, privacy is not telling you, trust the black box, Jason, it's there. It's actually for you, Jason, to be able to verify that it's there, but for the rest of the world not to necessarily be able to see it. That right. To us is really the big difference between our approach to privacy. Privacy to us is, hey, I can disclose information on a need-to-know basis, where ZK is more anonymizing information and just trust the algorithm that the information is there.
Makes sense, right? It's direct access versus essentially having a middle framework, if you will. And
it's a black box. You would have to rely on a black box to kind of like tell you, and you would never know unless something really happens.
Right. Interesting. I think our listeners obviously are paying attention to this and really kind of starting to ask the harder questions, right? In terms of, what technology is there? Obviously, there's a lot of progress being done. I mean, obviously, everyone wants a lot more assets to come on chain, but it is important to kind of set the foundation, cement it well before we kind of onboard those higher risk institutions and whatnot that really want to be able to, again, to your point, have direct access and know what's going on here. So I want to shift it over to Canton then. With all of this in mind here, and risk and privacy, trust that you guys are building, we've noticed, obviously, there's a lot of institutions that are now on Canton, on DAML, and I'm curious, how are you guys then doing it differently? What's so unique about Canton that the institutions find that valuable that you have that many already onboarded?
Yeah,
and then I want to go into a little bit deeper of other stuff, but yeah,
sure. And I'll try to keep it simple, but kind of explain kind of the technical nuance about Canton. So, why the name Canton? There's actually a reason for Canton. So, first of all, the team that have developed the layer 1 is all in Switzerland. But for those that kind of know kind of the Swiss system, Switzerland is effectively a federation of cantons, and effectively every canton has some unique elements to it. Everybody knows that Zug, lowest tax rate in Switzerland. That's why all the crypto foundations are in Zug. That's why all the corporations are in Zug. Zurich has its own rules. Geneva has its own rules, and all these cantons, but they all interoperate under Switzerland, right? Like they're all part of Switzerland. And when we started building Canton, this idea that the world is homogeneous to us seemed a bit naive. So if you think about most layer 1s today, they kind of say, this is my privacy model. This is my access model. If you're building an application on top of it, figure out if it works for you. If it doesn't work for you, do a lot of shit off chain, do a lot of things, away from the chain. Like, you need to figure it out. But that is our model, and our model is homogeneous. And the reason to do that is because then achieving interoperability is much easier. Everything is the same, interoperating everything. And to me, interoperability, Chris Dixon was just actually also on Unchain, was talking about the exponential effect of composability. I think that that's really the biggest value of blockchain and layer 1s is composability. But the reality of the world is that, different applications, different assets will have different requirements. I'll give you an example. Let's say I wanted to manage healthcare records on chain, and I think we will get there. Nobody wants, their doctor appointments and their like who they went and what they saw to be available for everyone to see. We would want that to be very, very private. Yet we might actually be okay with a stable coin to be pseudo-anonymous where everybody can see, account movements. Well, how do you do that in a way that you can compose? I can actually pay for my doctor visit without leaking that information, because this one has a very different properties than this one. So the idea of Canton was to create a layer 1 that can actually serve different applications that have different privacy and control requirements, and hence the different cantons that can all interoperate with one another under one layer 1, but that have very different properties. So that's really like kind of like the background for the name and kind of the thinking behind it. So how do we do that? What Canton does, which is very different than other layer 1s, is it actually says to the smart contract to define its rules. So a smart contract can define that I will be something like a fully permissionless pseudo-anonymous asset, meaning every time an update to that smart contract happens, everybody on the chain gets to see it. It's fully transparent. Everybody gets to participate. But the really nice thing that Canton can do is I can also create a smart contract where me, Yuval, can issue an asset, and I can say, well, only me, the issuer, and Jason, who's the buyer of that asset, should be the only two people to know about this asset. So what Canton does very differently than other chains, it can actually inherit kind of the behavior based on the smart contract kind of configuration. And you can have like this really heterogeneous set of assets and applications that all exist on one chain and can compose transactions with one another. And that's effectively how we achieve privacy. So if we want to do something that is very private, that smart contract, that data is not just automatically going to be fully replicatable across all nodes in the network. It would actually be only replicated to what we would call the interested parties in that smart contract. And we'll keep only those interested parties in sync.
Fantastic. That helps kind of better understand against the implications here and why you guys are building the way you are, which also kind of, by the way, I'll pause here. Anyone on the Security Token Show will be going on to the next interview or the next section of the show. But if you want to watch the rest of this interview, go to STM TV. It'll be there and catch the rest of the insights that we'll be expecting here from you.
All right, we've got another mega giant financial firm entering the space, Apollo, world-class fund manager. They bring a lot of amazing products to market, this time tokenizing one of them, a private credit product on Securitize, and announced through a new partnership with Wormhole through 6 chains as well. Pretty cool stuff. I actually think those 6 chains, by the way, are Polygon, Solana, making big moves there. Ethereum, of course, Avalanche, Aptos, and Inc., which I believe might be the first RWA on Kraken's new L2 that they have brought to market. So I think that's really cool stuff. In this case, the ACRED or ACRED tokenized fund here is a non-traded close-ended interval fund. Okay, it's seeking both current income and capital appreciation with low volatility and low correlation to the broader markets, according to the PR statement. Okay, so of course we know this is for qualified investors only. This is all institutional stuff, but this is a big deal. We've kind of seen some noise from Apollo for quite some time now. They've chosen Securitize, making them once again sort of the top choice by finance, by Wall Street, if you will. And I thought it was interesting. Once again, a great use case here. You know, they're offering redemptions through daily NAV calculations to make sure you can allow those daily potential redemptions out of the fund. Okay, so this is great stuff. It's a classic tokenization model. It's textbook. It's what we're going to keep seeing throughout the rest of the year from other bigger names, just as big. And you know, this is business as usual now. So I'm very, very excited to see that. What's also business as usual is this going multi-chain situation. Okay, this is the reality of what the future looks like. We are not going to just have one chain we settle on. We're not all just going to Ethereum. That's why we saw the rise of all these other alternatives as well. And we're going to unfortunately keep seeing that, in my opinion. But don't worry. Multi-chain solutions exist, and it's actually not that bad to deal with and beneficial ultimately for RWAs to take advantage of going multi-chain. Specifically, Superstate said that their USTB and USCC will be going in the coming months and weeks, they said, weeks and months, that they're going to be going multi-chain. Okay, so we don't know which ones, but they actually did say in their post that they want L1s and L2s that are in the RWA space to reach out to them. So it'll be very interesting to see if they're using one of the many popular interoperability solutions that are out there focused on RWAs, or if they've built something completely in-house. In this case, another kind of example, we see OUSG from Ondo continuing to also go multi-chain as it adds XRP to its now addition. You know, I don't know how many they've got, many, more than 5 or around that number in supported blockchains. But in this case, it's, essentially you can mint between your RLUSD, so that's Ripple's stable coin, right? And you can now take Ripple stable coin and go ahead and mint yourself some OUSG from Ondo. So multi-chain again, folks, this is the future. It's where you're going to see many different RWA asset managers and fund managers go to reach adoption, as well as to take advantage of different applications on different ecosystems and win over those communities, right? So speaking of winning over, that's exactly what Ethereum is trying to do with Etherealize. So this is a pretty big deal. As we heard earlier in the interview, Ethereum is now betting officially on institutions coming in and building on Ethereum. This has actually been happening for quite some time. We saw BlackRock launch their BUIDL product on Ethereum, but now Ethereum's foundation is saying, hey, go talk to Etherealize if you're an institution and you're interested in this space and you want some help. So we've seen many different chains sort of apply heads of tokenizations. In this case, it's an entire organization. You love to see it. And another cool news around that you might have also heard slip there from Jason in that interview is that Texture Capital joined up the Canton Network. So they're going to be using their ATS application, right? So Texture is a broker, and they do have, just like Securitize and INX and T0 and many others, they do have a broker-dealer license that allows secondary market trades, an alternative trading system license. And so it looks like they are the choice for Canton Network to take advantage of, which, we saw, I believe it was like 9 billion euros or something like that from KfW get added to Canton just recently. So there's a lot of good stuff happening. But the last thing I want to end on in the market movements here, folks, is Particula. They do so much good work in this space. They have a great platform, as well as a ton of in-depth research. And, we consider ourselves some of the best, if not the best. Well, Particula has us gunning for it here because they have some amazing ratings as well going out, something that we don't do at STM. They've assigned a AA rating to the USTBL token, which is by Spyco. Okay. So, the money market race and everything else in that space is hot. There's some great comparisons in there I recommend you go check out. And I just recommend you go check out Particula in general. If you're an investor and you're researching this space, they got a lot of good stuff over there. So, wow. What another amazing week. With that, we've got some updates from the RWA Foundation. So as you know, we are rounding up every crypto native who loves RWAs into our DAO, the Wally DAO by the RWA Foundation. So we released our white paper just on Christmas Eve. If you haven't read it, go check it out at RWAF.xyz. And we announced recently our roadmap. So actually right now we are in the middle of working out our mechanics of how exactly those will qualify for the Wally token to participate in the very cool DAO we are launching for the industry here, that we've partnered up with over 30 incredible RWA brands. They're blockchains like L1s and L2s. We got the marketplaces, we got ratings companies, we got the tokenization engines and the issuers even. We've got them all. So it's a great time. We're busy figuring out just exactly how we're going to organize it all and launch. So the best thing you can do is encourage your feedback. Be loud about it. Go out, especially on X, and especially about the platforms that you are already on. Tell them, hey, we want to qualify for Wally because we hold this token, or we invested on that RWA, or we signed up for an account with your platform, etc. You got to come up with the ideas. Our job here is to reward and organize the best community based on merit, like Trump likes to say, based on RWA activity, not just anybody who signs up and qualifies. So we're trying to build a real enthusiast community. So that's why, whether it's on INX or T0 or Securitize or Proppy or Maple or any of our other amazing partners, and Shintai, MetaWealth, et cetera, come up with how you want to qualify for Wally. Make sure you be loud about it. Let us know what you'd like to see. Let your community know that you'd like to see Wally be a big part of it. So that's all we can ask for now, is you got to stay tuned for some amazing things in the work. I just wish I could talk about or show you, but you're going to have to stay tuned in the meantime. And with that, that's all I got for you. Check out our Telegram. Just hit around 300 members now, and follow us on X for more news. Let's move on with the show. Well, that's it. That's all we got for the show, everybody. We have to now pick our companies of the week. Since I'm all by myself, that means only one company is going to win. So here we go. We're going to pick, well, Kyle would be very upset about, not bringing in a huge, illustrious introduction for the company of the week. But it's obvious to me, I think, right? We're picking who we thought made the biggest moves in the space. And this week, I have to give that out to Apollo. So congratulations for making a big, big statement with a cred, a huge pick with Securitize and going multi-chain with your product and the way that it's structured. It all sounds very cool. Obviously, this is all not financial investment advice, as everybody knows on this show, but Apollo is a $500 billion asset manager, okay? They are huge. And so when they do things, people pay attention. So they are now amongst these big names that are now in the tokenization race. And I just love to see that. So this is, business as usual, as I was saying earlier. I'm just so happy to see it. And Apollo seems to have done it all the right ways. So congratulations, my company of the week. Let's see you do more and see you keep growing a cred. Congrats. And with that, that's the show, everybody. Make sure you tap in. We got all the latest data. We got billions and billions, it seems like, every day and every week being added. So we're adding it to stm.co, over 50 billion plus tracked across bonds, real estate, equities, and more. We've got it all for you. And of course, more videos over at STM TV on our YouTube. We're going to have some big announcements coming up about Tokenize this very soon. Got some cool research coming out. Man, oh man, stay tuned. But of course, you're going to have to wait till next week to hear from us again. So with that, everybody, happy tokenizing.